And good morning, and welcome to another episode of Money Matters, broadcasting live only on onedealaway.com/live. My name is Nev, and we're going to be talking about money because, well, it matters. In today's episode, we actually have a very important episode. We're going to be taking a look a little bit at what happened at the markets yesterday, what's going on with the precious metals. They have been performing incredibly well. And of course, we're going to be talking some very important economic sort of moves and shakes and what's coming, what people are talking about. We're going to touch up on the stimulus, of course, because that is something that everybody's awaiting. Apparently, there's a little bit of news, not a whole lot of news, nothing is official. And if they can't figure it out over the next, I don't know, 7 days or so, well, we are waiting until September, and it's going to be a long August for many, many people if it already hasn't begun. So, as you can see, we're going to have all kinds of stuff. We're going to be talking about the bankruptcies and what's going on with that stuff, businesses shutting down, their new candidates, right, kind of running for the office in 2020. I know you know that. This is not a political show in any way, shape, or form. We do focus on money, finance, economy, business, investing, and all kinds of, money matters kind of stuff. But I do think that some of the things and proposals that some of the incumbents or the current government leaders, or however you want to call them, are proposing could have potential. Sort of a downfall effect for all of us. And I think it's important for us to discuss it. We cannot simply ignore it and pretend that it's not happening, right? Like stick your hand in the sand and like whatever. It doesn't work that way, right? So we're going to talk about that stuff. We're going to talk about gold and what's going on with gold, what's been happening with that piece, and kind of what's happening with the mint, U.S. Mint. There's some news from there as well. And, it's just going to be a full show of all kinds of very big, broad topics, predominantly focusing on how do we sort of benefit from what's going on and how do we protect our money. So let's do this. And good morning, good morning, good morning. It is Tuesday, I believe. Hold on. It is Tuesday, July 28th. So it's almost end of July. We're almost hitting into August. Schools are about to begin, or maybe not. I don't know. We'll find out that it's probably going to be different for different locations, private versus public. I'm hearing there are many people who had kids in public schools that are putting them in private schools with the hopes that schools will reopen live and that they will be able to send their kiddos away so that they can actually work. So that we'll see kind of how that works out and how that's turning out. And of course, the whole fiasco. Same thing is happening with colleges. Many of them are going full online or a little bit of like partially online, partially in person, depending on the major, depending on the classes. So it's going to be a very interesting and very, very different kind of fall for everybody. Then when we go into the job sector, of course, there's not a whole lot of jobs happening. Many of them are shut down. Businesses are still shutting down. And we have some news on that in a moment. And those that are staying open are continuing the practices of work from home and extending it. And of course, let's get started. I have so much news to share with you that it's unreal. So let's get started with this one. This one is coming out of CNN Business, and it's talking about the same thing that I mentioned to you yesterday. I just didn't have the news to show you that Yelp is saying 60% of restaurant COVID-19 closures are permanent. And there it is right there. There's here is saying right here that they're basically talking about that stuff. And that basically means that as of July 10th, Yelp found 26,160 total restaurant closures, an increase of basically almost 2,200 since June 15th. Of all the closed restaurants in July, 15,770 have permanently closed, 60%, accounting for 2956 more permanent closures from Yelp. That is a 23% increase since June 15. And my personal opinion is that this is going to continue. This is just a beginning, and it is not going to end anytime soon. There you go. We have another report coming out of the Washington Post this time around that is basically saying if a business is closed at this point, it's likely never opening ever again. And of course, what you see over here, the little sign, the store for rent, there's going to be way more of that coming our way. And we have some very, very important news that we're going to cover in a moment that kind of talks about some of those pieces. So this one is the piece that right there again, the healthiest businesses have reopened and the ranks of permanent casualties have swelled. It's now more likely than not a business is closed. It's closed for good. Meanwhile, we're seeing that the permanent closures are now outnumber temporary ones. And you can see here the temporary ones, they're sort of starting to go this way. The permanents are starting to go this way. Eventually, temporary is going to disappear. And we will see that the permanent is going to continue. And, of course, the highest sector is the restaurants. I think the very next one, what is going to be happening are going to be some of the other tourist areas, hotels, resorts, let's see, what else do we have? Gyms, I think, might suffer. We'll see. Maybe not. I mean, it's going to definitely be interesting. Shopping and retail, if they haven't transitioned to online business, they are not coming back. Bars, nightlife, that kind of stuff, if it's not banned, I mean, it's kind of hard to go, do your thing with the face mask and you can't breathe. Come on. I mean, seriously. So here we go. Business closures by industry from March 1 to July 10th. And you will see, of course, remember, permanent is the blue, temporary is yellow. And we're seeing restaurants, of course, shopping, retail, beauties and spa. I forgot about that one. Bars and nightlife and fitness. And you will see that this is kind of where it's going to really go in. Now, business closures by state. This is a very interesting one. You can see Hawaii is, I mean, I would say rocking it if they were winning, but they're not. And talking about Hawaii, interestingly enough, I wasn't planning to do this. It just kind of popped out. We have, this is actually coming out of Hawaii News that COVID-19 has claimed 900 Honolulu businesses. This is coming, basically being reported, and that more than 10% of the closures are permanent. And, Hawaii is a very, very expensive states, and it does live a lot on the tourism. And of course, if nobody is flying, nobody's coming there, all of the importing, and it's not importing per se in the international sense of way, which they do some importing as well, but also, I mean, it takes a lot of money to ship stuff from continental US to Hawaii. I mean, when you go to Hawaii, that flight is forever, right? I mean, you're closer to Japan than you're closer to United States, right? If you think about it. And so, it makes sense that it costs a lot of money. And of course, they are not getting many people coming in. And so this is one of those things that is very, very sad when we talk about this whole thing. But let's go back to the business closures right here. You will see Hawaii is first. Nevada is very second. Nevada's casinos have been slashing employment left, right, and sideways. And they just have announced that they're going to be going through yet another round of furloughs and layoffs because guess what? Nobody's going there. Nobody is gambling. So they're losing a lot. California, we've talked extensively about California and what's happening there. Arizona is fourth, Washington, Oregon, Colorado, Texas, New York, Illinois, Florida, Utah, and I mean, you just kind of keep on going down. Here we are. This is me right here. I can't highlight it, but right there where it's not letting me do anything. Right over here, that's where we are. And of course, the biggest winners or the least amount of closures are South Dakota, North Dakota, Mississippi, Delaware, West Virginia, Wyoming, Montana, Arkansas, Iowa, Alabama, Nebraska, Alaska, and then it kind of goes on up. So they are, having way less businesses. But I'm also going to argue that some of these locations here may have a bit less businesses than some of these locations up here, right? Size of Texas and size of South Dakota cannot be compared by sheer size, by number of people, by number of businesses, and that kind of stuff. So, but anyways, it is one of those things that is very, very interesting. And of course, they're talking about, employment is coming. Well, employment can't come if we're seeing this stuff, right? There's no employment if there's no jobs, right? And so it's one of those things, and there's no jobs if the businesses are shutting down, whether temporarily or permanently, right? And then you go into the stimulus bill, which we are about to jump into. So hold on to your seats. We have a new thing that just rolled out yesterday. It was announced, and here we go. Republicans put forth their new stimulus package proposal of approximately 1 trillion called HEALS Act. I mean, come on. The acts that they come up with and all the names, I mean, give me a break. Seriously. Oh my gosh. So, anyways, what's in this one? Well, there will be a second stimulus payment of they keep flirting around. Some are saying 1,200, some are saying maybe 2,000. They are putting in that they're expecting it to be about still the same thing potentially. So more likely than not, we're looking at same $1,200, $75,000 or less in income for single person, 150 for couples. Same deal that we got before. So they're talking about a few different things, but that's basically where things are. The income retirements, we just talked about that as well. The $600 per week, it's not going to happen. There are new things that are kind of being flirted. It's $200 a week, which is a far shy from 600. That is going to be much easier and simpler to deploy, meaning it's going to go much quicker. However, there is a second part of the proposal that is saying they will receive 70% of what they used to receive as employed, as if the person who is now unemployed chose to be unemployed. I mean, sure, some people, when they were receiving $600 per week, chose not to go back to work because they were making more money not working than working. A big gap in the system, right? Somebody didn't plan that correctly. But most people didn't choose to be fired. They were let go of a furlough or whatever because the economy shut down. The businesses have gone away. So now they're saying, well, 70%. If that rolls out, we can expect that the benefits won't start rolling out until sometimes in early 2021. You heard that right. Late 2020, early 2021, because it's going to take them months to roll this puppy out. About 4 or 5 months. So it's going to be end of the year, which means people are going to suffer a great deal. And if that ends up happening, I mean, if you think you've seen riots, wait until this happens and this continues running out. People will be angry, and I do expect if that is to roll out, there will be additional stimulus checks coming in, including the universal basic income coming to everybody. So if they're able to roll out this 1,200, then if this is, if they can kind of hold on to people for a little bit longer, bias maybe, if they can do it in early August, of course, that will make it a bit more palatable. If they can't, then, if they can't agree to it until August 7th, so we have what, like 10 days, not even, then it's not going to be until after Labor Day, because remember, they go on their vacation number 3 since the pandemic has started, because all of us have had 3 different vacations, all lasting anywhere between 3 and 4 weeks. Of course we will. Of course we have. Of course. So, anyways, if they are able to roll that out, that's going to hold people out for a little bit longer, and then we'll see kind of how it tapers off. But if that doesn't, I do expect that more riots, and now for hunger, not necessarily for race and beliefs, but because people are starving and they need food. That's when the next set is going to be coming in. Will the independent contractors and gig workers continue to receive? It's sort of questionable. They're saying maybe, we don't know. So who knows? They're saying we are just looking to potentially extend to what's going on and what's happening. So will the payroll protection program be extended or expanded? The answer is yes. Right now it's set to expire on August 8th for any new loans, and they're saying that they would want to extend it and expand it, and it would allow small business to take the second PPP loans. And of course, we still don't know exactly how the whole repayment is going to be, which is what makes it super risky, but you got to do what you got to do. And that's only for the small businesses that haven't shut down already, as we've seen, which is a very, very large number already. Excuse me. Will the new stimulus packages include payroll cuts? No, the one currently does not have it. So they're saying, nope, it's not going to have it. So we'll see if it's going to get vetoed. Who knows? It could get very, very political very fast. If it hasn't already, right? We're talking like could get political. Come on, Nav. It's been political for months now, and it's only going to continue. And we're going to talk a little bit more about politics, not just about politics itself, but about politics and the sort of beliefs and stuff about money and the impact that it could have, right? So, uh, will there be any new student loan forgiveness provisions? No. The answer is no. They could care less about you and your loans. You will have to pay them. I'm sorry if I came off harsh, but that's basically what I'm reading in this article. And that's the message that they're sending me when they are saying, nope, we're not talking about loans at all. Will there be a return to work bonus? Of course, it is there. It is proposed 450 a week for some period of time. But again, that is assuming that you can find something, which good luck. I think that more businesses are going to shut down than jobs are going to be created. But hey, what do I know? Will there be aid for states and cities with new stimulus package? Will there be aid for states and cities in the news? Yes, they're going to roll something out for cities and states, but they did not necessarily, roll out anything specific. So the proposal did not offer state and local government any additional funds, but it does grant them more flexibility in using existing existence, which is not enough. So there will be additional of these. Don't worry. There'll be so many of these coming. It's not even funny because this is just a beginning of where we are. This is not ending. It's not going to end pretty. It's not going to end anytime soon. Again, that's just my personal opinion, and you've heard it here first on Money Matters on July 28th, broadcasting live. And since I'm talking about broadcasting live, I do want to welcome everybody who is watching this live. Feel free to say hello in the chat. And those of you watching this on YouTube, let me know that you're watching it by smashing that like button right now. Do subscribe if you like the channel and the information that you're receiving, and get that bell button so you get notified every single day that the show goes live or gets posted on YouTube, which it happens every day at 7 a.m. at 7 a.m. New York time. Okay. Will there be liability protection? They're saying yes, and it's going to be retroactive. They're basically trying to protect the schools and public places that basically, if you get sick over there, it's not their fault unless you can prove that there was a gross negligence on the part of the hospital or the school or whatever other places they have. So there's going to be there's going to be some negotiations because Republicans are putting one thing, Democrats whatever. Will renters be living in house federally backed mortgages still be protected from evictions for not paying? And it sounds like no. It is not in it. That has expired on July 25th. That expired on Saturday. And now landlords still require 30-day notice. So if they haven't notified them prior to expiration of the whole thing, because they could have, you could notify earlier. And again, depends from state to state. Now, if they have already set notices, this has expired. Boom, some of the evictions we are going to start seeing probably as early as yesterday and today rolling in. And then, of course, month of August is continued to drive that further. However, proceedings are going to take way longer because many courts are still closed. Some are operating just on emergency basis. Some that are open are going to be operating, obviously processing, but it's going to get clogged because there's just so many people. So I expect that this is going to basically be kind of rolling out, I don't know, starting right now, but we're going to start seeing some news and impact from it as early as August. And then obviously September, October, we're going to definitely pick up on seeing that stuff unless something else happens. The new Republican stimulus package of July 27 proposed extending moratorium, but the extension date is unclear. So right now, not much is going to happen. Does not provide any help for tenants of buildings backed by privately insured mortgages. And here's the piece, right? When you're a tenant, it's not like you freaking know, right? So now it's part on the landlord to know what they do or don't have, which some do, some don't, and you'll hear more about it in the news here today. But then it's going to get into court, so it's going to get very, very messy, very, very, very messy. Will there be funds allocated for testing? The answer is yeah, they're going to put some money towards that. Will there be funds allocated for schools? The answer is yes. Will there be a new stimulus bill passed into law and become active? Nobody knows. Short answer, nobody knows. If they can do it basically, I don't know, today, tomorrow, this week, sometimes pushing it maybe into next week, then great, it might happen. But if they don't, wait until mid-September. So here we go. Over the next 10 days or so are going to be crucial. So now, before we go into some other news, I do want to jump in and take a look at what's been happening in the markets because it is important. And here we go. We are looking at the what are we looking at? We are looking at NASDAQ. Okay. So we're looking at NASDAQ one day. As you can see, we are up 1.67%. Looking at Dow Jones, up about just short of 0.5% yesterday. And S&P 500, we are up 0.74%. So just under 1%, we are up on the major indexes or indices or whatever, however you call it. When we take a look at the cryptocurrencies, there was a little bit of cooling in the market. If you have been watching Bitcoin, we have hit well over 11,000 yesterday. We have come down since then to 10.8, but still very much in a bullish trend. ETH has hit about 325 yesterday, that last time I checked. And so we are slightly down. And the reason I know this is because I have been, as you know, I have been learning how to program and stuff, and that's very, very exciting. And so part of what I was building is a website that basically is running some of these things and showcasing it. And so because I'm building it, I'm constantly looking at it and renewing it. So I am like in it for hours and hours and hours. And it was actually quite fantastic to be able to watch this puppy run wild. Now, final piece that I do want to take a look at is gold. And we are looking at gold. As you can see, this is very much live. It's going up and down. We are hitting new highs. So we have broken the high of it. The one that we're looking, I think it's a 1 day chart. So as you can see, we did hit high of almost 1780. Is that about right? Right? Where we are, right? Kind of right around here. So 1976. So almost 1980. Since then, we have come down. But if we take a look at a little bit zoomed out chart, this is what you can kind of expect to see. You can see how beautiful this market has been. However, if you were to draw some trending lines, which this is looking all kinds of weird right now, so I don't want to mess around with stuff. Yeah, see, I knew I was going to do this. You can see that if you take a look, if you were to draw a line, which, where the heck do you draw a line here? Oh, no. Yeah, so anyways, forgive me for my inability to draw the lines. But you can see right now over here that we have broken a little bit down. So I expect it to kind of, do a little bit down piece. Here is the channel. You probably could add some of the chart graph stuff on it, but I haven't done it. If we are to look at the logarithmic chart and do the percentage change, right? Not much is switching. 6 months, you can see if we go into the log chart, we've been performing rather nicely. And of course, when you have this big breakout, it always comes down. It is natural. It has to happen. And this is the percentage change. So that gives you kind of where we are on the technical. This is what they're saying is still on a buy. And there's all kinds of things that you can get, news and all these different pieces on it. And we're going to talk a little bit about what is going on when it comes to the gold market. And with that, it's going to take us right into the next news episode thing, the news that are coming in. U.S. Mint has reduced silver gold coin supply to purchasers, and this is coming out of Bloomberg. It was published this morning. I mean, hot off the press, as they say. I don't know if that still applies to the internet stuff, but anyways, enjoy this while I take a sip of water and we continue. Okay, so what they have done is because of the COVID crisis and stuff, they are basically having to reduce the number of people that they can have in Mint, which means that they cannot produce everything at the capacity they have been producing before. So not only are they not getting everything from miners that they need to produce the coins, right, to mint stuff, but now they also don't have enough people in their refineries in their mint to be able to produce it. So what they're doing is they're actually reaching out to they're saying that it's going to slow coin production for next 12 to 18 months, document is showing. And what they're basically doing is they're reaching out to the because you can't buy directly from mint, so you actually have to have a dealer, which is where some of these folks are making money, right? Where you find a dealer that is selling physical, then they charge a little bit of premium or a lot of premium depending on how much or how little things are coming in. And so they're reaching out and saying, hey, dealers, what is selling? What do we need to mint? Is it gold? Is it silver? Is it platinum, palladium? Because we can't do it all. And so they're basically taking orders and they're going to be minting what they're requesting. Now, this is very interesting for a very specific reason. Now, what is that reason, Nev? Well, there are a couple of different reasons, right? So here we go. This is one of the reasons, right, that is coming in because the prices have been going up, the supply is shrinking, the demand is increasing. Gold futures hits 2,000 after U.S. Mint reduces bullion coin supplies. Yes, this was published late last night. Well, late for some of us, early for the rest of us. And now they're actually hitting well over 2,000 in the futures market. But that is only the spot market. That is not physical. In the physical market, we are going to expect that that premium that we just talked about is going to go up. So we expect not only is the spot price, which is paper traded asset thing, whatever, which you just saw dropped from the 1970s something down to 1930s, still above that what was once ceiling. It's still above that. So we'll see if that acts as a resistance to help it bounce off. If it kind of goes underneath it, we do expect that it's going to go down even lower in the spot marketplace. But if it bounces off of it, it is possible that we're going to break that 1976 new record and potentially hit 2000 or above. 2000 is next logical sort of psychological step that it could be the new ceiling. We'll see how it all pans out and works out. But when you're looking at this piece right here, you can see that it's hitting 2000, right? Silver is topping $26. U.S. Mint has reduced the volume of golden coins and distributed to authorized purchasers, and you can see that the sales have kind of gone up in March, right? We have kind of come down. We're starting to tick back on up. And now they're reducing it. So that basically means that the prices, more likely than not, are going to go up. Ahead of this unexpected interruption in supply, premium for physical gold was already high, and this will send it soaring back to near those 100 levels seen last mint production halt. So we're expecting that the coin premiums to spot, as you can see, was going down. We can expect that it will go up. So if you are looking to purchase physical as opposed to just trade in paper, gold, and silver, well, in that case, you're going to be paying a higher premium, and that could be as early as today. So if you haven't already ordered and you're looking to order, then you could potentially do that piece, and see if you might get a bit more advantageous premium piece. Now, since we're talking about gold, let's continue talking about gold with another article coming out of the Deutsche Bank that is basically, the top credit strategies. Jim Reed out of Deutsche Bank did the unthinkable, admitting that he is a gold bug and adding that, in his opinion, fiat money will be a passing fad in the long term history of money. In his views, central bank balance sheet will explode in the decade ahead and probably beyond. The Fed may need to add up to $12 trillion to its balance sheet over the next few years to reach what he thinks is equivalent to a shadow Fed fund rate of negative 5% to fill what he calls the policy gap. We've discussed this previously on this channel. If you want to learn more, simply go to the YouTube, look for Money Matters, click on the Money Matters tag, and you will find it. I think we talked about a week ago, maybe 2 weeks ago. I don't know. I apologize. Days are starting to run together to me. The lessons for the monetary policy outlook are somewhat discouraging in the absence of considerably better economic outlook due to the factors exogenous to the Fed. The example, more rapid development and widespread availability and usage of a vaccine or significantly more robust fiscal response, earningly more aggressive QE is needed. And even though they're saying this is kind of what they're saying they might look like, but what I'm saying is that we're talking about this is going to become in years. I think it's going to come in sooner than that. And it's not potentially going to come right now because everybody's sort of worried and kind of, it's election year. We're trying to do all these like weird dances and stuff. But I do expect that it's going to roll out much, 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 much quicker. This is not a projection, but more of what would it be need if they chose to balance sheet route alone. Above means that the Fed will need to catalyze another market crash to usher in the new round of massive stimulus. This right here is key for you to know and remember. I'm going to read it again. In order for them to justify doing this, which they'll have to do anyways, but they will have to come up with a justification, the Fed will need to catalyze another market crash to usher the next round of massive stimulus. Now, will they crash it right now? Potentially, maybe, nobody knows. More likely than not, probably not before the election, although, because everything is so politicized and everybody's like one side or the other, we don't have a whole lot of middle happening at all. And it's very, very polarized. I mean, it's like people are at each other's throats, and there's no ability to appreciate what anybody's saying from any side, right? For me, I like some stuff on this end and I like some stuff on this end. And there's a lot of things I don't like on either end of things at all. But we're not seeing that necessarily. We are basically seeing I'm right, you're wrong, has nothing to do with it. There's no appreciation that, wait a minute, what you're talking about makes kind of sense, but what I'm talking about on this end makes sense. Can we marry them together and make something beautiful out of it? That's not where we are. People are very much in the I'm right, you're wrong kind of mentality. And when we have that kind of mentality, we see all kinds of crazy things. So we could potentially, depending on how politicized, and you watch some of the movies, come on, admit it, even if you don't understand the politics completely, like I don't, and I try to stay out of it completely because it just gives me headache and it's just wrong and it's manipulative and I dislike that kind of stuff. I dislike that kind of stuff. I just want everybody, like, how do we create something that everybody can benefit? That's my ultimate goal. So anyways, so what we're seeing right now is that that's kind of happening. If we see that the Fed and Treasury and that kind of stuff is more pro-Trump potentially, right? Then we could see them sort of, boosting up the market to kind of keep them potentially or try to keep them in the seat and then potentially crash it after that. So that would be basically what? December? Merry Christmas! If, however, they're saying, you know what? We don't want this guy, this orange guy, gotta go, whatever. Trumpster, gotta go to dumpster. And hey, that's a good quote right there. You should tweet it. You should tweet it and say it, like tag me or something. I don't know. Anyways, and if you liked it, smash the like button. Maybe you liked it. Trumpster into dumpster. Maybe that should be the name of today's episode. Yeah, we'll call it. Why not? Hey, that's a good marketing right there. Typically, I suck at it, but maybe that's a good one. So if they want to do that piece, what we could easily then see is that they might crash it right before the election. So maybe not right now, too early, people on vacation. So you want to do it sometimes in September, October. Then, boom, you roll out the next guy, support them, and then, they come up with all these solutions. So we'll see how that rolls out. Anyways, let's continue. Reed calculates, that's the Deutsche Bank guy, calculates that if the balance sheet was used as the only tool, hitting this amount would take roughly 8 years at the current QE run rate. But I think that they're going to run it much, much faster. Anyone asking how to best hedge against the monetary insanity that is coming, the answer is very simple. keep buying gold, whose surge to 3,000, which is also Bank of America's price target, is just a matter of time. And you will see right here in the chart, yellow is gold. This gray is silver. Very cute. I like that. And the silver has a long way to catch up to where it should be based on the long-term gold-silver ratio, which basically means that silver might have a potential to move way faster and way higher. Water break if you want to check out the stuff. Okay. So that's one of the pieces that I think is very, very, very interesting. Now, we did talk about previously about what's happening with the whole work at home and the jobs and that kind of stuff. And we have a news right here that is basically the Google is extending its work from home to July 2021. And of course, other firms are going to follow, those that haven't done it already, which some already have. And so basically, they have about 200,000 employees, and they just issued saying work home option effect until at least July 2021. And that could potentially extend, of course, for everybody who doesn't have to be physically present in the office, right? So that's kind of how this is going to work. Unlike other tech companies, Google has never really got on the permanent work from home. However, Twitter and Facebook have announced permanent shift into it, and Facebook had said that many of its half of its employees might work remotely, completely remotely in 5 to 10 years. Alphabet has a large office presence in San Francisco Bay Area and as additional headquarters, and it has, I mean, just all over the place. You can see that they're all over the map, literally speaking, right? So this is not even a figure of speech. They're everywhere. You can see where their offices are in the country and kind of locations. Uh, Now, with working remotely has big impact on housing, both owned and rental apartments, as well as office sectors and commercial real estate. In Silicon Valley and San Francisco, where working remotely has become a very big thing, it is already showing up in the housing and office sectors. Condo prices in San Francisco Bay Area in June dropped 6.5% year over year, and the median rent of one bedroom apartment in San Jose dropped by 8% in June compared to a year ago. San Francisco, 11.8%. And it's going to continue. A large amount of office space coming to the market, particularly sublease space. That basically means I, as a company, I own a particular, piece of real estate, or I already, sorry, no, I don't own it. I'm leasing it, right? So maybe I have an office space that I leased, but I no longer need it, but I am locked into this 10-year lease. I'm going to go out, find somebody else who's going to basically take over the space and sublease it so that I don't have to pay for something I'm not using, right? So that's kind of how it works. And typically in the commercial, not always, depends kind of how you write the contract. In commercial, that's much more likely. In the residential, many landlords don't like that, but some don't put in a lease, which means you could potentially do it. Those that explicitly say you can, then you cannot do that stuff. So anyways, just something for you to know if you are either on the renter side, investor side, right? So things for you to know. Overall office availability in Silicon Valley in the second quarter has risen to 14.4%. So the availability going up, prices going down. It is going to continue. At some point, it's going to overshoot, and it's going to potentially make sense. Doesn't make sense as of right now and as of yet. So there you go. That's kind of what's happening in that neck of the woods. And then finally, the last article that we have to cover, which is the piece that I said we're going to touch a little bit on politics, but mostly because it focuses on money. And that is this particular article that I was able to find that says the United States will not recover by raising taxes or printing money. Whoa! Nobody expected that, right? Everybody thinks, well, just print money and raise taxes and everything is going to be fine. Well, printing money does one interesting thing, and that is it basically increases deficit, right? And it creates more money supply and that kind of stuff. So out of the two, personally, this is not the author of the article. Personally, out of the two, printing money actually has way more positive effect right now in a deflationary situation than raising of the taxes. However, let's learn and see what they have to say. So I think it's very, very important to understand, and this is authored by Daniel Lacale or Lacale, Lacal. My apologies to Daniel for butchering his name. The fiscal 2021 deficit would reach 2.1 trillion in 2021. Duh. When else would it reach it than in 2021? But okay. Average 1.3 trillion through 2025 as the economy recovers from the impact force shutdown. This is adorable, by the way. I like this. I like this a lot. The Democratic Party leader, Joe Biden, is announcing a massive tax hike that will neither help the economy nor reduce the deficit. And this is the part where I said it's getting a little bit political. I could care less who wins, honestly. Like I said, I don't know that I particularly like anybody who is running, who is potentially going to be running or going into it because, there's no magic pill here, But anyways, personally, I mean, if I had the whole thing, and of course you would want to learn as much as you can and get the best advisors and that kind of stuff. Personally, I would just put the U.S. into default, wipe everybody's debt, right? Debt jubilee for everybody, wipe the slate clean, and that is what my running platform would be. But before you decide Nev should run for president and vote for me, I don't qualify. I'm not able to do that. So, anyways, that's just the way that I think is the best way to get out of this hot mess. And it's the fastest, it's the cleanest, it's the least painful method. That's just my methodology and thinking. But who knows? I could be crazy. So, anyways, this is basically Joe Biden was saying that, if I get elected, it's going to be massively taxing everything because that's going to help us. I don't think that that's going to help us, and I agree with many of the solutions here. The solution to the United States budget deficit is not more taxes. More taxes will hurt the recovery, damage the job improvement potential, and reduce investment in the economy. More taxes means less growth and no deficit improvement. A wealth tax that's tax the rich. Those that are truly rich, they don't earn the money the rest of the people do. So when they increase the taxes on the rich, they're increasing taxes on the income, meaning they're hurting small businesses, which wait, oh, yeah, those are the things that have been hurting that employ the most people. So when you do that, guess what? They either raise the prices, let go of the people, combination of both, or have to shut down. Yikes, not a good solution. But hey, keep on trying because it never worked before. But this time is different. It's not, but hey, we can try. A wealth tax, often repeated by the most extreme politicians in America, would not only provide exceedingly small revenues for the Treasury, it would generate more negative than any improvement in the tax receipt. Federal government's revenue went up by 4%, and spending went up by more than 8%. This is how the U.S. is in trouble, and this is how they reduce the deficit. Stop spending. Stop spending, right? Here's the interesting piece. When we talk personal finance, we always talks about, hey, if your income is smaller than your expenses, right? Your expenses exceed your income. You got to focus on two things: increase income, decrease the expenses. Same thing in businesses. When your revenue is here and your expenses are here, you got to do both to equalize and hopefully get your income right here, right? Makes sense. But somehow, when we talk government, income is here, expenses are here, and they keep rising. Income goes up like this, expenses go through the roof or off the screen in my case scenario, right? So, but that's the interesting piece. Sorry. So that's the interesting piece that's kind of happening. And so now they're saying, well, income is right here, expenses are right here. So don't worry about this. This can keep on growing, but let's inch this up just a little bit. It doesn't work that way. You got to do both. You got to do both, okay? But we're just focusing on income. The rise in 2019 deficit was not due to the tax cuts. If anything, tax cuts helped the economy stay in expansion. The main problem is total outlays rose by 8%, driven mostly by mandatory expenses in Social Security, Medicare, and Medicaid. And so that's what they're saying. Like, that's part of our problem is all the entitlement and all of the promises, right? Corporate tax receipts already fell 1% in 2017, 13% in 2016 before the Trump tax cuts. Reducing the corporate rate helped companies recover, which in turn made total fiscal revenue rise by $13 billion in 2018. Printing money has not reduced the deficit of debt. Federal Reserve has increased its balance sheet to record highs on its way to $10 trillion, and purchasing treasuries has only driven governments to continue to spend above budget. If proponents of massive money printing tell us that deficits do not matter and that the United States government should spend all it needs because the Fed will acquire all the debt, then there is no need for higher taxes, is there? And I absolutely agree. Now, there are two sides of the house here, right? One says deficits are bad. You got to close the gap. It's the only way to operate and run. And those are the people that are looking at the sound money policy, are typically looking on a fiat currency to be basically backed by something, typically gold. And so then you got to balance your checkbook. The proponents of the money is debt, which it is, are saying that wait a minute, deficits don't matter because if you're issuer and the borrower at the same time, it washes. It's just this silly numbers game that matters none. And those actually come also out of this modern monetary theory that basically says that as long as you're printing it and you are actually, owning it, it doesn't matter. This is the part right here. That because the Fed will acquire all the debt and it's sorry, hold on. Massive monetary printing, it does deficits do not matter because the U.S. government spend all it needs and the government can actually acquire all the debt. And I agree. If that is the case, then there is no need for higher taxes at all. Matter of fact, you would actually, if modern monetary theory, MMT proponents were right, taxes need to be cut, not increased, and deficits monetized to drive the recovery. In addition to that, if all of that truly is true, that you can just print it out, then there's no need for taxes, right? Let's eliminate those puppies altogether. Hey, I'm all for that personally. But then, at that point, you go and say, well, wait a minute. If you can print all the money, right? And if you can generate it and there's no need for taxes, that means that, is there need for a job? Do I need to even work? Can you just give me the money and we can all go golfing and bowling and playing cards and gambling and whatever, right? So that's a very interesting thing that opens many, many doors and many conversation points. Monetary policy is only disguising a structural dangerous spending problem, and this reckless behavior can only be maintained if the US dollar remains the world reserve currency. The only solution for America to reduce debt is to cut spending and entitlements. It is completely impossible to double the receipts of a growth year like 2019 with higher taxes. Higher taxes will only wreck an already weak economy and delay the recovery. And I absolutely agree. Part of the reason I'm not crazy about any of the guys for many different reasons, but part of the reasons that I am borderline fearful on the when we talk economy and money on Biden potentially winning is because I think the guy will go with the increased taxes, which is going to take this where we are. I'm calling it a depression. Is going to make 1930s look like a joke, right? And so that's the part that really, really scares me. Of course, Trumpster in the office, Trumpster in the dumpster. I'm still laughing at that one because I'm really liking it. Is I don't agree with some of the social policies and all of this other stuff that is happening. So again, I'm split. I like some stuff. I don't like. Economically speaking, I don't like the higher taxes. That's just kind of where I am. Let me know what you think. I'm curious to know. So in the chat, if you're watching this live, let me know what you think and where you stand. If you're watching this on YouTube, again, smash the like button right now and then let me know what you think. I really am curious about where people stand. It would lead to job destruction, corporate relocation to other countries, and lower investments. Debt matters, even if interest rates are low. Increasing debt and spending means lower growth and weaker real wages in the future. And there you have it, folks. Talk about a super full show, super full episode where we talked about all kinds of different things. I am very curious about where you stand and what you feel like and think. Where's the gold going to go? To the moon or into the dumpster with the Trumpster? I don't know. Let me know. Let me know. What do you think are going to happen with the stimulus? Are they coming? Are they not? Let me know how you feel about taxes in order to save things. Printing, is that going to work? Or are those things complete disaster? So for me, I obviously have my own opinions, and I always look for ways to diversify my funds and look for things that could move in the future prior to them moving, so that when the crowd comes, remember, it raises the tide, it raises all boats, including my own. That is my wish for you as it is for myself. I look forward to chatting with you tomorrow. For all of you watching live, we're going to go into the Q&A in just a moment, so don't go anywhere. For those of you watching on YouTube, thanks for watching. Smash the like button if you haven't already, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.